we are covering the 11 optional uniform provisions for the National Health Insurance exam. Unlike the 12 mandatory provisions that must be in every policy, these are optional for the insurer to include. On the exam, you must understand that these provisions exist primarily to protect the insurer. The change of occupation provision is a major testing point. For example, if an office worker becomes a high-rise window washer, a more hazardous occupation, and files a disability claim without notifying the insurer, the company will reduce the benefit to what the premium would have purchased for the riskier job. Conversely, if that same person moved to a less hazardous job, the insurer would reduce the premium upon notification. A huge exam trap is the misstatement of age provision. If an applicant states they are 42, but are actually 52, and this is discovered when a claim is filed years later, the insurer cannot void the policy. This is true even if the 2-year incontestability period hasn't passed. The insurer must pay the claim, but they will adjust the benefit to the amount the premium would have purchased at the correct age of 52. The test will try to trick you by offering void the policy as an answer. It is always incorrect for misstatement of age. Next are the provisions dealing with having multiple policies, which uphold the principle of indemnity. The other insurance with this insurer provision applies if you have 2 or more policies with the same company. If you have 2 disability policies, the insurer will cap the payout and refund the premium paid for any excess coverage. The insurance with other insurers provision coordinates benefits between different companies to prevent profiting from a loss. If you have 2 medical expense policies from 2 different insurers, they will work together to ensure the total payment does not exceed the actual medical bills. Similarly, the relation of earnings to insurance provision is crucial for disability income policies. It prevents an insured from receiving more in disability benefits than they were earning while employed. If your total disability benefits across all policies exceed your monthly earnings, the insurer will only pay a proportionate amount and will refund the premium for the excess coverage. The unpaid premium provision is straightforward. If you have an outstanding premium payment, when a claim is filed, the insurer can deduct that unpaid premium from the claim benefit before paying you. This often applies to claims made during the policy's grace period. Finally, the conformity with state statutes provision is a safety net. It automatically amends any policy provision that conflicts with the laws of the state where the insured resides to meet the state's minimum requirements. If your policy has a cancellation clause that is less favorable than your state's law, the state law will always prevail. To remember these optional provisions, just ask yourself this question: can my old insurance rate uncomplicate? That's change of occupation, misstatement of age, other insurance with this insurer. Insurance with other insurers, relation of earnings to insurance, unpaid premium, and conformity with state statutes. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.